Hey traders, this is Christian from Hertz. Happy Monday, and this is your end of day video for the 5th of April. Let's get to the risk disclaimer here. Risk disclaimer, everything that we're going through is for information purposes only, not giving any advice or recommendations. But I would say today's theme of the day was, the just follow through. The S&P continuing to break out here. Notice that, we were stuck in that 3-week range, March, just a very difficult time of the year. Traditionally, the seasonality is weak, and it kind of lived up to the hype. We tried to get going a couple times and stalled out. And mind you, the S&P was did much better than the Qs did in March, but it was just a lot of sideways, choppy type price action, frustrating kind of couple of weeks for most stocks in the S&P. But here you go. Here's your breakout, and once we break out like that, it's I always stick with the trend, right? I never try to doubt it or go against it. I'm always just sticking with, especially when we've been consolidating for a while. I just go with the trend. I don't argue with it. I don't try to look for things that are going to tell me otherwise. Of course, I'm mindful of the indicators and what they're telling me above the hood, below the hood. And if I see something that's really alarming, then I'll take note of that and make some adjustments. But overall, this has been pretty good. All right, so let's go over the numbers and we'll talk about some single stocks. We'll talk about some misconceptions that I think it's just funny on Twitter. Twitter is such a funny place. There are so many nice things, so many great things that you can learn. And there's some really good follows who share what they're doing and who are honest. They're not salespeople; they're more traders. And then you have the bad, right? You have a lot of a lot of noise. So I'll go over a couple of misconceptions and just things that I noticed today. But the S&P was up 1.4% for the day. Nasdaq was up 2%, so outperformed. It did actually outperform through the session too. I always look at percentage change from open just to see where there was profit taking versus when you start up, when you gap up like you did today from a long weekend. You want to make sure that people are still buying things, and that some areas are in what areas are in greater demand versus what do people just see a gap up and they're taking their money and they're checking out. They're taking profits. That kind of happened with the small caps today. The small caps were leading coming into today, and you could see they went down about 70 basis points. They still finished positive for the day, but they gave back a lot of their gains, versus what the Nasdaq did today. Bonds weren't really a factor for the day, which is good. We kind of don't want them to be a factor, right? We're going to have to continue to watch what yields are doing. If yields kind of crank higher, and bonds go lower, that's going to be a headwind for, in my opinion, high multiple stocks. So we'll be keeping an eye on that. We're not going to talk too much about that in today's video, but I think you have to be mindful of that. So let's just get back to the S&P here. So this is one of the misconceptions that I kept hearing on Twitter. Oh, well, it's a low volume day today, so I'm not happy with it. Well, it's always low volume in the indices when we rally. And it's amazing to hear some of these people who are saying this type of stuff. All you have to do is look at a daily chart of SPY, Qs, IWM. But here, instead of looking at S&P futures, we'll look at SPY. This was such a nice rally. Let's go back just for a second from November. Tell me in November when you saw high volume in the SPY. So it always blows my mind when people complain about the volume when there's a big up day. It just doesn't happen in the indices. And I'll tell you again, I say this all the time till I'm blue in the face, but high volume happens when the market turns and starts going lower. It also happens on big distribution days. I'm sorry to break it to you, but that's how it happens. If you're looking for a strong volume day when the market's going up, you're not going to find it in the indices. So again, take a look. Does that mean that you have to give back all the profits in September? In in November and December because it was all low volume? No, it's just that's how it works. That's the market dynamics. And again, I'm sorry to break it to you. But low volume is what you want. when the market is rallying. So again, take a look. And you don't have to go and test this. Just look at this. Look at the chart. Here back in September, high volume, right, on the turn and go lower, right. High volume again on breaking down. High volume on the turns. Back in what we saw in around the first week or so of March. So you got to get this out of your head because I see it over and over. Oh, well, geez, I'm looking for high volume. I'm looking for high volume for confirmation. If you want confirmation when the market's going higher, you don't want to look at volume in the indices. You want to look at breadth, right? So you want to look at it advancing and declining. That's kind of more of a confirming thing. You could also look at the RSI a little bit too, right? You want to see the RSI going higher too. Notice right now the RSI in the S&P, right? It's actually going higher than the last peak, right? That's confirming. Okay, well, what about market breadth for the day? Right, we'll look at the advancing names, 408 versus declining 96. So not the strongest breadth in the world, but still, it's good. And in the Nasdaq, Nasdaq was a little bit funky. I would say that kind of had an issue for most of the day. That was, we were looking at that earlier. It was about 1400, advancing versus declining. But you could see the advancers actually outweighed. And I think part of that too, with part of the performance of the Nasdaq was just because the FANG stocks were very strong. I want to talk about them today, but the FANG stocks were very strong today, and they are a much bigger chunk of the indices, so they can tilt things. And what we like to do sometimes is look at the equally weighted ETFs to see if they're still strong or what they're doing. And the S&P equally weighted still broke out to news highs today. So again, even though as nice as today's price action was, and as nice as it was, last week, but let's just talk about today for a second. One day is not a trend, so it doesn't. Every day you have to be on guard, right? If you're trading, if you're investing for the long term, not so much, right? Because you have a different time frame. But if you're trading like I am, sometimes day trading, most of the time swing trading, you do have to be on guard and be disciplined and aware of your risk, right? That's the most important thing. All right, so let's talk about sectors first. So that's the one misconception that I saw for today. Another one too, and this isn't really a misconception, but I saw a lot of people asking questions about this for the day, and I talked a little bit about this when I was on Bloomberg TV earlier. But they're like, "Hey, what's going on with the VIX? Why is the VIX up today?" Well, put it in perspective. We went down, the VIX got hit pretty hard towards the end of last week on Thursday, right? It finally broke 20. The range, it was kind of going back and forth like a ping pong ball between, just under 20 and back up to 21, 22. So remember, on Thursday, it was down huge. So it bounced a little bit today. Also, it also wasn't down, 5-10% today. Because remember, I always go back to what the VIX measures. It measures the implied volatility of short-term options, right? Some people like to call it, it's the fear index. Well, you could call it that, but that's not really what it does. Because believe it or not, the VIX can go up when the S&P goes up, right? So remember, what usually happens is when the market starts falling fast to the downside, the VIX goes up, right? Because it's a fast move. If the market goes up fast, the VIX also goes up, right? Because all it's measuring is implied volatility in the short run. It could go up, so it's not so much the direction of the move, it's the speed, right? But again, usually it's stairs up or escalator up, an elevator down. That's usually how it works. But every once in a while, the market will go up fast, and that's what it was kind of doing today. So that said, I would still be cognizant of, we don't really like to see, I don't really like to see the VIX go up when the market is green. However, I would watch this range. right? And just be cognizant of what it did on Thursday, right? So if we start to get back above 20, then volatility is kind of creeping back in a little bit. But it's good to kind of realize some of these things so that so that you don't kind of get trapped into the thinking that the VIX only, and again, it's the majority of the time when the market goes down, because it goes down faster than it goes up, that the VIX will rise then. But on occasion, when the market's moving big to the upside, you'll also see a VIX, go higher on that. And the VXN was also up a little bit today too, which is the VIX for the Qs, right? Again, I don't find this chart troubling, considering what the move was on Thursday. So put things in perspective, right? All right, so let's talk about, kind of what we were talking about last week. I went on Bloomberg and I talked about this particular ETF. This is, again, tech, right? But dividends, high dividends. And there's a tweet out by Liz Ann Saunders talking about the price to sales ratio is at an all-time high for the market. Well, here's a difference, right? Let's look at software. Right, so if you look at the software ETF, IGV, and again, I'm not like, valuation is not my thing, but at least I want to be cognizant when things get really expensive and if the market changes a little bit. So if you look at IGV, and I think you'll find this maybe, where is this on Bloomberg? Not holdings. Yeah, so if you look at, the price to sales ratio is about 11. For IGV, right? So price is much higher than the degree of sales. If you look at this, right, and this is kind of what the market is in love with right this second, and if you look at the TDIV, which is tech with dividends, the price to sale ratio is only 2.7%, 2.7. So it's more fairly valued, right, than in terms of this ratio. So if you look at this is why this is breaking out. The market right now is just institutions are buying more names that are, have a lower valuation right now. And part of that is because of interest rates. Now, one of the things that we talked about in today's Q&A session was, remember, the way the market is really kind of controlled a bit by what institutions are doing, right? So if you're looking at bonds and thinking, right, because that's kind of been the relationship. When yields go up, tech stock, high growth stocks have been going down. But it's not just the relationship, and you can't bank on that happening every single day. It's what the institutions are doing, right? So if they're going to actually, because some people they get confused. They're like, well, I don't understand. Bonds are up today, and or bonds are down today, and growth stocks are not down. Like what I thought this relationship was supposed to hold. Well, it really depends on what the institutions are buying and selling, right? So there are those relationships that we want to pay attention to, but it's a bit more complicated than that. It really is going to be whether or not which groups of stocks get bought and get sold, right? So that's my little bit of explanation on that. Let's go into, we talked about a little bit over 10 minutes about that. I want to talk about, so we mentioned TDIV, right? And we've seen names like Oracle, IBM, these things have been moving. Well, we started to look, towards the end of last week at Google, right? And, Google finally got out of this range. And I said, hey, maybe this thing is going to get going, right? And this is where fun things happened. Too many people I see, and, again, this is all my opinion, right? But too many people, once they see, oh, geez, Google's up this much, it shouldn't be up this much, right? It hasn't been up this much in a while. Well, it's breaking out. It's in price discovery, right? So over time, what I've learned to do as a trader is to go with these directions, especially when a name hasn't been doing anything for the last couple months. So yeah, it's exciting, to me, what Google is doing. And I switch, right? I try to be as objective as possible, right? I haven't liked these FANG stocks for a while. And if you've heard me talk in these videos, I've been complaining about Amazon for a while and how it's not been moving. I just want stuff to move, right? So finally, you got Amazon moving a little bit. Now it's coming out of this range. It still has a lot of overhead stuff, but I'm targeting, in my call spread that I put on. I would like to see this 32.72 VPOC being taken out. So here's what I did, right? Again, I always show my trades, but this was a small trade that I put out on at the end or the middle of the day on Thursday. Yeah, and I was able to take this off, for $11.50. I paid $5.80. I think that's the easiest way to play Google is through a call spread. The options are very wide, and you can try to get a little bit of a better fill and take your time with the call spread, because I just think the outright calls they're a little bit too difficult, and the stock is very high. So what I do, once I get a profit like this, I try to stay in the trade for as long as I can. So I did roll this position over, and I also subsequently took profits on this. But I mentioned at the end of the day, right? Because here was out of my roll, $8 paid $5.30. So I really did pretty well with this trade, and then if you want to keep rolling your profits, if you think Google can go up a little bit further. For the week, I got the 22.40, 22.50 call spread, and again, I'm taking my profits out of the trade every time. Right. So again, these short-term trades, they are high risk that you could lose the premium, and of course that's with any option. But when you're trading short term, at least I'm not putting on, like I said, an outright call where you could lose a lot more, even for a weekly trade in Google. So I think that's a nice way to play some of these high flyers. That's the way I do it, and it works for me if I get obviously if I get the direction right. Right. So I also put a trade on for Amazon. I didn't take profits in this one. I'm letting it ride a little bit, but I think Amazon is through. Where this thing closed, 32.31, so above my strike. So I could have taken this off for profits, but this one I'm going to try to get a little bit more, and hold on to it for a little bit longer. We'll see what happens with that. But if we go around to, I didn't trade any Netflix today. But we did see a call. I wanted to mention that we saw a nice outright call being bought. I think that was for April 30th. That does cover their earnings date on 4/20, but I think the option expiration was 4/30 that they did that trade for. So maybe one to watch the next couple of days. I don't know if they're putting that trade on for earnings or what. We're gonna have to start checking when we see option activity whether or not it covers their earnings report. And here's another one that I thought was pretty funny today. I tweeted out, again, kind of joking around because Apple has not been a great trade over the last couple months. But again, it looks like it's showing some signs of life, right? Made a little bit of a lower high here. And it kind of fits right into that wheelhouse of what institutions are doing. They're buying cheaper names in terms of valuation, right? So I think this thing could go up to 130, right? And so I did buy some stock in Apple today. Again, just looking for about a $5 move, right, from where I put it on. But it's so funny. I tweeted this out, and people are so opinionated. Oh, it's a horrible company. It's got nothing going for it. You know what? It doesn't really matter right now because that's what institutions are falling in love with, right? Take a look at Oracle. Do you think Oracle is or IBM are wonderful, wonderful companies? No, but they're trending, right? So who cares if you're a trader, right? Don't be so opinionated. If you're going to be that opinionated and you only want your super high growth stocks to go up, right? That's great for long-term investing, but there's money to be made in following these trends, right? And noticing, what names are doing, in terms of coming out of consolidation and so forth. But there's so many people. I think there's a lot of people that are really angry that their super high growth stocks are not working right now. And you have to be able to adapt to what the market gives you, right? And we could go over a couple other ones, but it's not where the momentum is right now. I'm long Square in my TTG Trend Portfolio, but I'm not long in my trading account. It's too hard. A lot of these names, they bounced last week and they just ran out of steam today. So they underperformed for the day. Now, again, today, one day is not a trend. I'll be watching this SE tomorrow, but again, finished down. Now, again, it had a nice couple of days last week, but Tesla's another good example, right? Tesla, and it's tough to complain about Tesla because it's up 4.4%. But again, look at where it opened and look at where it closed for the day. So you have to be very mindful of that, especially like today's, it is a little bit tricky when you have gap up days about what names you're kind of going to go after. I'm always a net seller in the beginning of the day on gap up days. And then I kind of look to see what names look like they have some momentum to them. But this 710 level, right? And I talked about this. I sent out, a couple charts this weekend saying, "Hey, listen, I would love for Tesla to get going above 710, and I'm all about it. But I got to see that confirmation first. So for now, I'm watching. It didn't give back too much of the profits. Here's the 1 hour chart. One of the things that's different on this 1 hour chart is that price for the first time since January has gotten above a value area, right? So these value areas are for the week, right? So look, so you can see the price is above 661. Take a look at last week. It made a rally up to the top of value and it got rejected. It got rejected the week before that. 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 So do you see the pattern here? So now that it's kind of out on the 1 hour chart, it just needs to push a little bit more. It's at 691. And then I can kind of get involved in a little bit more active trading. Once things are out of value, depending on the time frame, right, they are in a little bit more of price discovery, right, which is a lot better than trading in a range. Okay, so that's Tesla. What else did I want to cover? Oh, Microsoft. This kind of blows my mind too because Microsoft basically was bottled up, didn't do anything for a whole month. Back and forth price action, really frustrating the hell out of everybody. I had tried to trade Microsoft a couple times, and I bailed on it. It was too frustrating. But look at look at how quick. So if you manage to stay in this, if you had I think I had an option trade out in like June or something like that. And I think one I may have made some money on. Another one I decided to get out of. But if you stuck through it, and congratulations, right? Because it's not easy to stay in a trade that's doing this back and forth. But it resolved higher, and it resolved higher in a big way. And it just so a whole month consolidating, doing nothing, and then just 2 days, right? It's out to new highs. So again, it always surprises me a little bit how fast things can happen, and you have to stay on your toes. One of the things I always say to do is set alerts, right? Because all of a sudden, like a name could do nothing, and sometimes it's longer than a month, and then all of a sudden it catches some major momentum to it. So just like that, Microsoft is out to new highs. A lot of call activity today in Microsoft, and it closed very close to the highs today. So impressive. All right, a couple other names outside of tech that I thought were interesting. I day traded this one today. I think this could get up to, what did I say on Twitter, 59, right? So, it's kind of flirting with the breakout last week. Very impressive, right? And again, out to new highs. No resistance. Some newer trade, well, actually, I guess this was higher at some point. All right, so I got to take back what I was going to say. But I think some newer traders, they get nervous when a name breaks out because they have a difficult time finding where to take profits. I could tell you, and again, this isn't a full breakout because the stock was higher a couple of years ago, but I could tell you from personal experience, it's beautiful when a name breaks out to new highs because there's no resistance, right? And all you have to do is now this is easier said than done, but to manage the trade, right? You got to be able to kind of let the trade roll a little bit, manage it in terms of keeping a trailing stop, and realize that you're not going to get the tippy top high, right? So, but it's a great thing. I see so many younger traders. They get, oh geez, I don't know what to do now. I don't know where to take the trade off of. Well, you got to monitor it, right? You got to put what's called the trailing stop. And again, you don't have to necessarily it's just an alert that you're placing, right? You're not selling it. You're just placing a trailing stop, and then if it does hit a trailing stop, you're going to watch. right? And you could take profits along the way. You could take targets along the way. But one of the best things that could happen is when a stock breaks out. That's why, it's exciting to me, Google and Microsoft. Again, names that I haven't really been excited about at all. I talked about on Bloomberg today, Broadcom. I think Broadcom, we've seen obviously the strength in semiconductors. Last week was awesome. I had trades on it in applied materials, which I'm not longer anymore. Maybe I should have here kept a little bit of a piece on. Keep in mind they have an event day tomorrow, I think an investor day or something. So probably I would guess buy the rumor, sell the news. But, that's how I normally trade. So what else? I can kind of leave it here for the day because we're 25 minutes into the video. I just wanted to cover a few other names. INMD, this is a name that we talked about on on Thursday. This broke out. This is part of our watch list program, right? So, here's our watch list trade I buy all these names. I hold SPY over the weekend, so pretty easy for this weekend. It was up 72 basis points just for holding SPY over the weekend. So I'll take that anytime that occurs. And then what I do is I sell SPY on Monday morning, and I buy all the our individual names. Now I've done something a little bit different here. I'm owning about 45-50% of this watch list is sector ETFs. I just made that tweak over the last couple of weeks because it was just very difficult, single names. Holding them for the whole week. They would be very choppy at some point because my goal is, and what I do with this list is to hold it for the whole week. But it just March was too inconsistent. I would find a couple days, some names would be outperforming. You look a couple days later, and some of them would be giving back the gains and going lower. So I changed it to about, we have got about 50% sector ETFs. That takes a little bit of the single stock risk out of it. But from the open, right? And again, I even have SPLV in here, low volatility, up 85 basis points. This TDIV was up 1.3% from the open. Target was another nice name today that broke out that we went over. It's so funny because I get it. Like some of the trades that I'm going over here are not as exciting as a Fubo or an Upstart, right? But I'll tell you what, they're working, right? And it's funny because I put out some of these names on Twitter and I get like 5 likes, right? And if I tweet out Tesla, I get 50 likes, right? Just for example. But it's just so funny the difference in what people are looking for versus what is actually moving, right? So, this, even gave a nice chance for a trading opportunity for the day. Nice breakout, and I'm still long a call spread in this particular name. But again, to me, it's very funny when I tweet out a popular name, like a Tesla, it'll get so many more likes, even if I have something like that's not great to say about it, versus I could tweet out a really good setup, and just people are not interested. Like I'll get 4 or 5 likes, and the ones that are the less interesting ones end up doing a lot better than the popular ones. And I see this a lot on Twitter. So just summary of the video, right? Try to be as objective as you can, and sometimes if you have to, cover up the symbol. Because some of these names that are a little bit more boring right now, and this is what happened over the course of the last month, is some of the more boring names actually did a hell of a lot better. Just a couple of symbols that I'm watching for tomorrow. VFC, nice move. You got a VPOC up there, but nice move out of this consolidation. EL, which is a name that one of the Tribeca Trade Group members brought up. This name is close to breaking out, so that'll be on my watch list for tomorrow. Also, Western Digital. Close. This thing has been close a couple times to breaking out, but sometimes it's 3 times the charm. So we'll see if it'll be another name that's on my watch list for tomorrow. All right, guys, have a great night. If you're not a member of Tribeca Trade Group, and if you like some of the things that I have to say, of course, you could like the video, but you could also sign up and really, what I try to do is just get in front of these trends and be as objective as possible, not be opinionated, and just go with whatever trend is working, and of course, manage it well. Thanks, guys. Have a great night. See you tomorrow.